This is the Friday, March 30th, 2018 version of the Market Plus segment. Joining us now is Mark Gold, a managing partner with Top Third Ag Marketing, Elaine Kub, an analyst and author of the book Mastering the Grain Markets, Angie Setzer, Vice President of Grain for Citizens Elevator, and Darin Newsom, DTN's Senior Market Analyst. Welcome back, everybody.
Thank you.
So we didn't get to touch on cotton during the regular broadcast portion, so we want to start, of course, with cotton. And we are going to kick it off actually with a social media question. So we have Jay, in Kansas wants to know, has cotton taken that many acres away from corn and soybeans? We saw a pretty significant increase in today's reports.
Well, you saw the biggest increase in cotton acres was in Texas,
Yeah.
which I don't think was overly surprising based on where cotton futures have been trading all winter. You know, it's not. I was not surprised. There was some talk that folks were surprised by the increase in cotton acres, but a million acres plus of an increase isn't overly surprising based on what we've been seeing, I guess.
No, and as you know, to what Angie said, Deese Cotton posted a very strong rally. It looked like it was trying to buy some acres. When I was down in El Campo, Texas, southeast Texas, this winter speaking, you know, we talked about how the folks in Fargo were talking about losing corn acres to spring wheat. Well, they were going to forfeit some corn acres to plant more cotton. So the fact that we saw it today, you know, really wasn't any surprise. You know, at least in my eyes, it really wasn't that big of a surprise at all.
But geographically, it is interesting that you have the upland cotton. It was mostly the Texas, Oklahoma acres, which are under exceptional drought right now. Some of that is. So final production-wise, a bump in acreage may not be as influential as you might otherwise think.
Well, I think they looked at the new crop cotton prices and said, this over corn is kind of a no-brainer, and went with the cotton, which makes a lot of sense, I think.
So with that being said, it is an intentions and it's not a for sure number. Do you expect the trade or the plantings to hold true to what the USDA projected today?
Tell me what the weather is going to do.
Well, okay.
You know, that, I mean, that's really, I think that's the largest factor. I think everyone that can, if the market holds or if they have stuff locked in, you know, they're going to do everything they can to get the acreage planted. But if it remains dry, or, you know, the other thing that you're running into is in the Delta is too much rain at this point in time too. So, you know, Mother Nature is going to be the final decision maker when it comes to all of today's acreage numbers.
The other thing we didn't really get to touch on, we did a little bit, but we saw a significant jump in corn, soybeans, a little bit in wheat. Were those just a flash in the pan effect from today's reports, or do you expect that to hold steady here through the 3-day weekend into Monday?
Well, I think you're going to have to look at Sunday night's prices very carefully. If we do gap open higher over these contract highs in new crop corn and new crop beans that we made, that's significant. If we gap open on the first Monday of the month and continue, you know, we could leave that gap there for a little bit. Generally, if you don't fill a gap within 3 days, you can hold and move higher. If people look at these acreage numbers and they look very closely at the stock numbers, they might go, I'm not so sure about this. And if we do open up lower, I think it's an indication it may have been a one-day flash in the pan.
Okay. Let's talk live cattle, because we didn't get to touch on that either. They were not limit down today, but touching or near limit down prices. Again, I'm going to ask, what was the big factor that played into that for today?
One of the bearish stories of the cattle market and the hog market also, and this is not going to go away anytime soon, is the heavier weights. I mean, you're going to have a hard time getting very bullish, even if technically the numbers of the herd is not as high or not as growing as fast as traders might expect to see. They will still discount any of that potential bullishness because we have cheap feed. Feeders are going to keep feeding these animals heavier and heavier, and there's going to be no real shortage of that meat product coming onto the market.
There's real talk right now about running out of hook space. I mean, you talk to a cattleman out there, a cattle trader out there right now, and I mean, we've been hearing about the wall of cattle for 2 years now. And so I guess I'll be a believer when I see it, but there is real talk that this summer we will outpace our hook availability when it comes to cattle.
And that's been the fear in this cattle market for the last several months.
Yeah.
And we expect it to kind of hit that crescendo sometime June or July. So we took out some really important technical levels in the cattle on Thursday, and that just opens up the door for more risk. And when you look at some of the long-term charts, it's not a real friendly picture out here.
Well, and the other thing with cattle is I think part of the reason that we'd seen the rally and seen some of the supportive talk was the idea that we were building new export markets and finding new market structures to sell our beef and pork into. And so this idea of trade wars is something that kind of shuts that door at this point in time, at least in the short term, maybe more so than even, we talked about in the show, even more so than the row crops, just because those markets are in infancy. For the most part, your cattle markets, some of your pork markets, things like that, into other countries are more new and not as established, I guess you could say.
Elaine, it looked like you had something to say.
Well, even if they were established, that's just an economic reality that the demand for meat products is much more elastic than the demand for cereal grains, certainly, but even for oil seeds. And if we talk about China specifically, the diet of their population is dependent upon soybeans, and they cannot source enough soybeans from the rest of the world to get by entirely without U.S. soybeans. They will have to buy some U.S. soybeans. But the demand for beef, especially, and more of a luxury meat, even compared to chicken or pork, extremely elastic and extremely able to fluctuate from one year to the next.
Definitely. Darin, any thoughts?
Seldom. But no, I was in agreement with what was said. That's why I didn't jump in.
Okay,
So.
I just wanted to make sure.
Yep.
Haven't had to use that red card yet, right?
Still waiting.
If Monday's grains open up and stay relatively strong, will that continue to be a bearish story for the meat markets?
To me, I mean, from a relationship standpoint, sure, because a lot of people might say, you have
and
that
I think
corn
Darin
feeder.
touched on it maybe during the regular
Yeah,
portion.
exactly. So it could be a negative influence overall. The thing that concerns me more, and we never, really touch on it too often, but right now is the dairy sector.
Absolutely.
And so the strength in soybean meal that we're seeing is pinching an already extraordinarily pinched industry, and so that's maybe more emotion speaking than analytical talk, but it is something that I watch, and I know it's definitely causing some great concern out there. So I guess it could perhaps increase herd liquidation from the dairy side, which is what we're seeing a lot of in Michigan right now. The Holstein market is just absolutely abysmal because not only have we been feeding Holstein steers and we've had that market structure change because of who would process them and whatnot, but now we're actually seeing an increase in herd liquidation to a certain standpoint, and so perhaps we see that increase if the oil seeds and grain prices stay high and your feed costs aren't allowing at least a little bit of relief.
Last week I was in Wisconsin doing kind of a winter tour around the state, and obviously a lot of dairy farmers in Wisconsin.
Absolutely.
And when you look at this $14 milk, and it's dismal, and we're seeing the liquidation, and if you look at the chart, it looks like it's one heck of a base down there. So my suggestion would be to farmers, if they are selling milk at cheap prices, spend 15, 20 cents a hundred and buy yourself a call to stay in this game, because it looks like it actually has some upside potential. As we know, high prices cure high prices, low prices cure low prices, and we're seeing that pan out in the cash market. And I think maybe it's got a little chance for a rally here.
Well, and the margin protection program that they've put in place is supposed to help with some of those feed prices, right? Offset that margin.
Yeah, hopefully. I mean, that's what I mean. There's a lot of things, and it goes back to trade as well. Is we're kind of relying heavily on cheese and butter and the milk export demand and things of that nature, and so that market's just struggling. But I agree, we've been consolidating for a while, I guess you could say, and hopefully it'll help. But I have friends of the family that are dairy producers, and they'll tell you no amount of margin protection is helping cut their losses at this point in time.
Yeah, absolutely. Well, Darin Newsom, Elaine Kub, Angie Setzer, and Mark Gold, thank you so much for joining me at the table.
Thanks for having us.
Join us again next week when we explore how opposing forces have found common ground fighting for the Mississippi River, and Tom Fitzenmeyer will sit across from me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.